In high-frequency trading, every millisecond counts, but so does risk management. Imagine executing thousands of trades in seconds. Sounds exhilarating, right? Yet, without a solid risk management strategy, that excitement can quickly turn into chaos. Market volatility can swing wildly, and algorithms can misfire. A single miscalculation can lead to massive losses. That's why firms invest heavily in sophisticated risk models and real-time analytics. They assess exposure, set limits, and employ stop-loss orders to protect their capital. Effective risk management isn't just about avoiding losses, it's about seizing opportunities. By understanding potential pitfalls, traders can make informed decisions, maximizing profits while minimizing exposure. In this fast-paced world, the difference between success and failure often boils down to how well you manage risk.